What's going on? Happy Wednesday. We are live and we got a pretty chill environment. As we approach the next round of earnings and all that good stuff, things are not really doing a lot. I guess we're actually down a good bit today, but overall, right, if you look at the overall SPY, we're just in this consolidation. It just kind of feels quiet. Some things are stronger than others, but most things are generally down today, but not like too bad. It's also just coming off of highs, so it's kind of makes sense. It's somewhat expected, not like, oh, it's easily predictable, but it's okay, it makes sense. That said, that SPY's chart, let's look at the Dow is not down as much. The Dow is only down 0.5%. That's looking a little bit stronger. The Russell still weaker, down 1.15, and QQQ is down just under 1%. But they were down more, so it was worse earlier today. Things have bounced back a little bit. SPY had a lower wick down under 470. Now it's back near 471. See if we get any interesting action in the next half hour or so. But not a crazy day. The dollar was up, and it's still up, I guess. Not a lot, but the dollar's up. The 10-year also up. Is that a decent? That was a reverse. No, not really. Well, I guess, yeah, it is. If you go, no, not really. I was looking at TLT is what I was looking at earlier. I believe TLT at one point was green, and now it's red, but barely red, so flat to red. So, just a casual Wednesday here in January is what it seems like. What's going on, guys? Millen, Nocturnal Sky, can Apple bounce? Let's see. What's going on? Flippa, annoying day, and it's kind of. I didn't want to phrase it that way, but I agree. Apple is at us. It technically double bottomed, if you want to call it that. Yeah, pretty close. Today it bounced off the lows of January 5th. So was that like 2 weeks ago? Well, a week and a half ago. Bounced off that exact same spot around 180. 30, 180.25. Like that 180 spot is a decent spot. If you look at the volume profile, look at this little volume shelf right below that. It shows that was an area of a lot of exchange over the past couple of months. So that's, if you have the profile look like that, it does look pretty interesting at that spot. Let's let it refresh for a second and see what it looks like as it loads. I want to see if as I zoom out. Yeah, same thing. So you got a really nice volume shelf. Almost like, think of it as like that's kind of holding Apple up. Like it's just coming down and bouncing off that exact same spot. So we'll see if it pans out. If not that it can't go down, like it obviously could, but I don't know. This could be a wonky, choppy move through this area unless there's news, or that becomes, gets us through the earnings time. Of course, earnings is in about 2 weeks. And that'll probably be the big catalyst for a big move on Apple. But double bottom, setting up bounce. If 180 holds, not a bad spot. It's also a psychological area. Like 180 hold number, right? I could see that being playing into some people's psychology. AMD green, the only green large cap on my list of my more familiar ones that I like to look at. The only green one here. It was up more earlier. A very big move here in the past hour and a half. Very big move off the VWAP. Now we'll see what happens here. And that's kind of just slowly chopping back down after giving some back after that move. But not surprising because look at this. Like that move puts you right up into the same band that was pretty decent resistance, right? Yesterday, got up there, pulled back, got up there in post and pre-market, pulled back, pre-market, or I guess after hours yesterday, pre-market today, fell off. Now it's up there again. All I can say though is that you're putting pressure on the same level. Chances are that breaks. So it just tells me that I'm in the right spot for my only open position right now is an AMD long. I took off I took off like 20-ish, 25% of it yesterday. Before the close, because it was up so much. We were nearly at 160. My target was 163 for my entry. So I'm like, that's great. And then all I did today was I moved my stop loss to break even. So I can't lose on the trade at this point. But I'll hold it again tonight. It's not going to hit today. It's got 30 minutes to make a $4 move. I don't think it's going to do that. I guess $3.50, but I don't think it's going to do that. It could. crazier things have happened. I guess it did make a $3 move, literally more than that, $4 move from about 1:50 p.m. until about 2:40, so less than an hour. So I guess it could do it. I don't think it will. And I'll just likely hold that. Ideally, it gaps up tomorrow a few points and hits it, and then I'm out. But the big picture is I might even be selling myself short, to be honest, now that I think about it, on AMD, because it could easily tag this 165 and go higher up. I don't really care. The trade was a great risk reward initially on the entry point with a 163 target. If we get that tomorrow or whenever, Friday, I'm out. And then I'll let AMD do what it wants to do until its earnings report, which comes out on the, what is this? Tuesday the 30th. So that's 2 weeks from, is that 2 weeks from, yeah, 2 weeks. About. Neo hit new lows. Oh, shit. Yeah, let's take a look at that. Yeah. Yeah, a lot of the Chinese stocks have not been looking good, Baba included, right? Neo's had some pretty big bounces along this way down, but from like 7 all the way to 16, so over 100% bounce. That was back in earlier, I guess, or last year, mid last year. Doesn't look great. I think volume-wise, let's go to the weekly charts so it's a little bit easier to see. Clean up the charts a little bit. So since it started trading in 2018, here's the trajectory of it. Give it a second for the volume profile to load. But I mean, $4 to $5 could be your next spot to be looking at down in here. Maybe not right now. If the market stays weak, yeah, I guess, but probably headed that way if we stay in this downtrend. Big picture, you're probably going to just chop your way down into there. It's the next spot that I see. Maybe something around 5. I think $5 could be a logical area for a bounce. Psychological spot too. Baba, jeez, yeah, that I had an alert on it. That's closing in on all. That's not, well, I guess all-time lows would be around 56. It's still got it. Well, you know, is that $13 away? It's not that far. No, yeah, not that far off from that. Not doing too great there. I looked at this one and I thought about it for a decent trade. The problem is that it hasn't been clean. Yesterday was, I guess, a decent day to if you wanted to enter a short. It just, the problem is that it's had a lot of the moves have occurred overnight. So I don't know. So it's kind of had this big gap down, and then I was like, you know, I kind of missed the entries that I wanted to get it on, and then, you know, it's headed down. Big picture, that's just what it looks like. But today, right, opens up around 67, under 68, then it has, you know, about $1 bounce all day, so it's not down as bad. Just, you know, generally speaking, it's pretty lame. What's going on, Peter? Yes. No, yeah, we'll be back streaming tomorrow again in the morning. So if you can hang out in the morning, that'd be great. Ideally, it'll be around 9:30-ish. If not 9:30, like 10 a.m. Eastern time. If anyone's around, we'll be doing some, you know, same thing, live trading, more of like looking for setups and stuff. Not that we're not doing that now, I guess, but there's nothing that I'm pressed to do. I mean, I'm in AMD today. I have to do a trade recap tonight. I didn't film it yet, but I will post it later on oil. And oil, I think I kind of got myself a little bit caught up in a bias to a degree, but I had a chart set up to back me up, so it wasn't a bad trade. But I kind of was looking big picture, and there's a lot of shit here. Big picture, a lot of consolidation is what I mean by shit. So I shouldn't have really bothered with it. Although we're down here, and I was like, oh, we're kind of breaking this on the bigger time frames. You're breaking this, and then I was like, hey, can I zoom in on a shorter time frame and see a breakdown setup? And I did. I did see one. It just didn't work. So it wasn't a bad one. I mean, this is the trade right here. It was the consolidate, break, got in here, got faked out, and then it went back up. Not surprised that occurred, right? When you see this move right here, broke and then pop back up. Not as surprising to me. I guess like anything else, like anything can happen any given day, any given time, but not as surprising to me given the overall picture when you zoom out on the daily chart, and then even if you zoom out on the weekly chart, same thing, right? You're into a support. Like if we were pushing under 68 down in here, okay, different story, because now we're like breaking support, but we're kind of right in the meat of the support zone. So I lost $100 on it, not bad, but $100. If AMD ends up working out, it'll negate that. So again, you'll have if the only two trades I take this week were on oil and AMD, and AMD works, you make over 300, lost 100, so you net 200 something positive. It's not bad. But if you're feeling pressured to trade every day, or I'm only, and I was even thinking about this one earlier today too. I was like, there's just nothing to do. Like there's really there's times when it's push the pedal, and then there's times where it's not. And I just, the senses, the setups, the charts that I'm seeing, nothing is like pressing like yo AMD was yesterday. But other than that, I don't really love what I'm seeing. And then you don't really have the S&P support. Like SPY is not supporting everything. Like SPY is not breaking out of its consolidations. Like the Dow is not. The Dow, remember last week the Dow failed to break out of its consolidation. SPY kind of the same thing. Like it technically put in a little bit of a higher high here, but no momentum, no follow through, so it just pulled right back. Again, it's not on insane volume, but it kind of pulled right back, and so you're not getting a ton of momentum, and so it's maybe just kind of a consolidation, chill, let things settle, and then there'll be maybe opportunities in a couple of days, maybe next week, maybe after earnings, as things heat up a little bit with that stuff. We'll see. Maybe it's downside too. Just the problem is downside. I haven't really loved the setups that I'm seeing there, and couple that I liked. I can pull up a couple of those here today. Tesla, I was close. I almost got in on this one. I actually had a sell stop order set. So essentially, if Tesla had broken below, it was around 212. So I didn't see this until there was no trade on the initial move down here. Like this blue line is, I believe, yesterday's low. There was no trade there, but as we consolidated and started to push back on these lows, it was very close. We were like 20 cents away from triggering a trade here. It just didn't happen. And then it reversed. So like that was the short setup that I wanted to see, and just didn't work. And you see how Tesla's rebounding massively. So I'm like, oh, okay. So like the short setups, we were looking at BABA before. Yeah, BABA was a decent one, but again, the entry just didn't make. I just couldn't figure out the best time for an entry there. FedEx was one that we were looking at yesterday. That was interesting, and it's not bad. It's still technically fine, I guess, but it's just kind of you gotta have some stones and just swing it, I guess, is what you got. It's not a fast moving stock, so you get in, I guess, around this 245 or 244 area, and then it's just let it do its thing. And it's got a problem is that you got to get a move, I would say, down into like the 240 or 230s. Because your risk would be 251, roughly 252. So yeah, you need about like at least probably a $10 move would be ideal, right? Meaning you got a $10 move puts you down into this area, which is doable. I think it's very doable, but it might just take a while. So, but I was like, I really want to swing FedEx, which I haven't really followed too much lately. No, so I'm going to leave it on the watch list and stuff, but I'm not going to swing it. Just leave it alone. Got a couple other things that I've got alerts on, but TMUS, T-Mobile went off today. The alert went off today, and it could be good. But my concern with it is that it's got earnings next week. So, don't know if I want to deal with that. Although it looks good, right? Very strong stock. I really like the lower wick that we had yesterday and how it closed so strong. We're back towards the top of the consolidation. Then it breaks out today. You look like you're going to get higher volume on T-Mobile here. You look like you're going to get higher volume. Generally speaking, we'll see the next 20 minutes. Should get some better. If we get close to yesterday's volume, it looks good. So could be good. And the problem is that the way I'm looking at it was I would need it. It's not a very massive moving stock. If you look at the ATR, average range is like $2 a day. There are peaks of it going $3, but like $2 is kind of your average of what you expect it to move on a given day. And I was like, I guess if you have earnings out on Thursday, so it's a week out, I guess next week. Okay, earnings is Thursday. And if you got a $2 move for 3 days. That's a $6 push. Is a $6 push in your direction worth the trade, worth what you're going to risk? And so let's see if I put the entry right here, and stop loss. I would like to put the stop loss at 160, which is the bottom of this lower wick, but I just feel like that doesn't really make sense. I'll put it at the bottom of this consolidation because that was the consolidation. This lower wick seems like a liquidity move, a fake out move, something like that. And if we're breaking out and we fall back under that consolidation, that really invalidates the breakout anyway in my eyes. That's just the way that I view things, and there's no right or wrong. It's just the way you view it, and then how you view it and how you track it is like kind of a culmination of your strategy, right? So you're tracking stuff the way you see things. Your data is how you track it. Maybe someone says, I want to risk it here. Maybe somebody says, I'm going to risk today's low, and that's just how people play it if they're playing the breakout. Everyone's going to look at it differently. But, what's that risk? So it's not bad. For a 2-to-1 risk reward, all you're looking for is 169. Let's call it 170 roughly. Yeah, that's $6 away. So the math kind of works out as in like 3 days of $2 gain per day. That's the average move it makes. If it has, you would need 3 good days in a row though. And it makes sense. Just it's about a week away from earnings. I'm just going to leave it alone personally. And I also, again, haven't really followed T-Mobile very closely. So I'll leave it. I'll watch it. I'll learn from it. But I'm not going to trade it. It might work. Might work though. So that's kind of where my head's been. Some stuff is looking, like, oh, okay. And then it just, AMD was the one that was like the glaring, like, you got to take that. ExxonMobil this does not look good either. Now, I thought it was funny because this is also, maybe this brought the bias into the oil trade today. Because I was watching ExxonMobil yesterday and I was watching oil stocks and they looked pretty weak yesterday. And I was like, that's weird. Now, ExxonMobil is just broke below the lows of 2023. It hasn't been here since, you got to go back to like September of 2022, October 2022, which is a long time. It's been, very strong. It was strong for a while. Now it's not, as oil hasn't been, super strong, which kind of makes sense. But you're kind of getting this catch up in ExxonMobil now, kind of catching up to oil, I guess, to a degree. Because if you broaden the charts out, like oil was not as strong as Exxon, of how strong Exxon was like last year. So that doesn't look good. Not something that I found to trade, but that looks pretty weak to me on Exxon. CVX is Chevron. That hasn't broken down to a new low yet, but that could be setting up soon. They have earnings coming up in a couple of weeks. Just keep that in mind. Gold and silver breaking to the downside. Let's see. I was looking at them earlier today. I don't love the looks. Feel it's been boring, but no, that's exactly what you wanted. That's what you got to do. Just set the alerts. I literally had the T-Mobile alert went off. I set that this weekend, and I was like, oh, cool. But not going to trade it. Again, earnings, we talked that whole thing before. But that's all you can do. Like, just go through. I've got a list of probably 100 charts that I'll go through at least every weekend. Sometimes I'll do it during the week if I'm bored, and I'll go through it. Could be at night, could be in the morning, could be during the day. It doesn't matter when. Set the alerts at the levels that are interesting to me. I usually will set the alert just under the level. So let's say silver, for example, the breakdown level here is 22.48. I might set the alert 22.50 because as we're coming down, I want to be alerted before the line actually breaks so I can get my eyes on it. That's what I'll do is set the alerts. This looks like a pretty key spot for silver. I thought about this as an idea to trade this too, but I'm not going to do it. It's just a little too large of a. Here's my reasoning is because on the larger time frames, I have somewhat of a bullish bias on silver and gold because the bigger picture charts don't look bad. They actually look quite nice. Like when you zoom out to weekly and monthly charts. That's huge time frame though. So I have that, and that is not good or bad. I don't know. Is that a bad thing? Is it a good thing? It's the chart talking to me. It's how I see the chart. Second, the dollar is technically still in a downtrend. Like, yes, it's bouncing up right now. Like, here's the dollar. It's bouncing up right now, but until it gets above 104, which is this line right here, I still see it as just in a downtrend from here. So overall, that's not supportive of a move down. A downtrending dollar is not a great thing for a silver short. Could silver go down? Yeah, it could when the dollar's going down or up, I guess, or dollar going up, silver goes down. Could silver go down when the dollar goes down? Yeah, it could. And also this is just an area of congestion. A lot of congestion in this area. Although underneath here, the volume profile opens up, so I see that too. A lot of lower wicks, a lot of congestion, a lot of wicky action there. So I don't know if I want to partake in some of that. And then when I think about where am I going to risk, I gotta at least put a stop loss around 23 or so, maybe even higher, to make it, give it enough breathing room for it to be valid. Which then makes the target have to be down. If you do the math, like for this to be a 1-to-1 risk reward, and you risk at 23, you need this to go to at least 21 or under 22. So you got to get at least a 60-cent move. A 2-to-1 risk reward is a big move. It's like it's all the way down to 21, 30s, 35. It's like that's a big move, and that would put you at like, talking about these, that was a massive move down. So I don't know. I personally am going to leave it alone, but doesn't look great. I can see it dump. I wouldn't be surprised if it dumps, but I also, just based off the wiki action of this area and some of the big bounces we've seen off and reversals we've seen off this area, I wouldn't be surprised if it kind of cuts underneath and then snaps back, in the future. Gold a lot stronger. Gold doesn't look strong today, no, but just big picture, generally speaking, technically you still got higher lows. If this ends up holding up over, let's say it holds, this 1975 area, if it holds that, like you're technically still fine. It could just build a higher low and then eventually go up and break out. So, that's how I see it. If it starts to break under this 1980 area, 1975, not as great, but then there's just a lot of congestion is there as well. So I don't know if I don't really like it. I don't like it. I only like gold up. If gold breaks up here, I like it. If it doesn't do that, I'm not going to short it, at least anytime soon. Leave it alone. So definitely gonna get in the habit of setting alerts at the key. Yeah. No, and I hadn't done that, to be honest, that much over the years, and I've come to appreciate it a lot more. I really have, because it's just, again, there's times, and I think you appreciate that, and you go through phases when you appreciate it, when you don't. I have gone through plenty of phases of pain and over trading, and that's been the biggest negative, I think, in the past couple of months, past year, go back a year, about maybe a little less than a year, that I could say off the top of my head that I recall. The problem has been really over trading is when I give back gains, or when I have red months, or when I have red streaks. It's over trading. It's doing too much, trying to do too much. There's just no need. So especially in times like this, where we don't have a lot of momentum in the overall market, underlying market, like isn't just sending it to highs. It's not like we're going nuts. Just, chill, let things just set up, let things settle themselves down, and there'll be fewer. What I find is there's always something to do, there's always options, but there's fewer options, and so just focus in on the best quality. And I think AMD for that swing trade was the best quality, and so far it's looking good. Now AMD, we'll see what happens tomorrow. Technically speaking, the S&P is down today. This would be day 2 in a row of down. Not that that's a big deal, but the S&P on average has a 1.72 red day streak, and then it goes 2.18 green day streak. So on average, 2 red days down, the probability suggests that the S&P will be up tomorrow. Doesn't have to be, but the probabilities and the data suggest that it should be up, or it could be up. There's a higher chance it's up than down tomorrow based off of that data. And it doesn't have to be up a lot. It could barely be up. But in that environment, for example, AMD is up today in a down market where everything's down essentially. It's a very good chance that the target's hit. So I like this. I like where I'm sitting on it. I'm not going to sell anymore. I trimmed some off yesterday. I moved my stop loss up to break even, so I can't lose because I took off some profits yesterday. And either tomorrow, not either. It doesn't have to happen tomorrow, but hopefully tomorrow we open up a little bit of a gap up, or it pops at the open, sells me out, and then we're done. It can go higher, it can go lower. I don't give a shit what happens at that point, but the trade's over. That's in a perfect world what I want to see. So we'll see. Overtraded many times. Yeah, no, I mean that's one of the biggest, I think, problems that I've had. It's been doing that. Done a lot less of it, and it's been good. And I've also come to kind of grips with the less is more approach. And it's like, eventually, like, I don't really care. The sizing is the same sizing, generally speaking, roughly. It's almost impossible to get the exact same risk on every trade and same reward. But if I take even if I took 3 swing trades in an entire month, and those swing trades just happen to be good, you know, let's say, like I think I was saying this yesterday or the day before, and I won 2 out of 3, you know, every month or in a given month, and, you know, you're risking a couple hundred to make, let's say, $500 to $1,000. You could be sitting on, you know, $1,000 profit with just 3 trades, just for example, on swings, and not having to put a ton of time in, and not that you're not putting time in, but just, you know, chilling. And that's on a 25K prop account. Ideally, I'd want to scale up to a larger size, but my experience with props has been pretty minimal so far. And with what happened to the last one, I figure let's just shoot for smaller targets, get funded ideally is not as fast. I'm not pushing like, oh, get as fast as possible, but get there, you know, in a good 2-month span. You know, you should be there. And then, you know, you can pull profits out. And then if the prop firm is good, great, you stay with them. If you don't, move to a different one. Not a lot of risk. I'm not tying up a lot of money. Not that you're really tying up money when you're just paying for the challenge. You know, you're not really risking a lot. And then, you know, there's opportunities to scale. There's even trade copiers you can sign up for and pay like $10 a month. With a lot of these platforms, you can get a trade copier. So what I was thinking about was, once I would be funded on one account, for example, let's say that I had a prop firm, like a 25K account, I would set up a trade copier, open a new account, open like a 100K account, right? So spend like whatever the number is, $500 for a 100K account, and then trade the exact same way on the 25K account, but just have it set to where it, you know, I don't know, 4x is the sizing on the 100K account. And then, you know, with a couple months, maybe you get you solid, just kind of doing your thing, you know, not looking to change your style. And then you can get funded ideally on the 100K account while you're making money on your 25K that you've already gotten funded. And then eventually move on to be like, yep, 25K account was great. If I got funded on the 100K, I'm going to move over to the 100K and just trade that one. So like the scalability is just, it's there when you're ready for it. I'm not worried about it. I don't really care. So I'm curious about trying that, because I'd be interested to see how that plays out. But yeah, maybe I do something like that. I don't know, because the trade copier is like $10 a month, you know, and say it takes you 2, 3, 4 months, you know, to do a challenge. That might sound like a lot for somebody, but for some people in the prop firm space, for me, I don't know how many trades I'm going to take a month. Sometimes it's like 20, 30, and maybe it's 10. And I don't know. It depends upon the setups, the market, you know, how the environment looks, and, you know, things are hot or not, right? So I don't know, but like and even a lot of prop firms will have like a scalability plan. If you're profitable for a couple months, they'll, you know, slowly increase your account size, you know, a lot of things that you can do in that space. Or again, if you're profitable, you're pulling money out, putting money aside, padding your own pocket, you can build up your own account. Once your account's large enough, trade your own money, which is what you want to do anyway. That's what that's ideally what you want to do. But it is nice to not have to have $50,000 or 25K stocked away in the brokerage, so that you have the buying power to then trade, you know, AMD essentially with however many shares you want to trade it with. It's nice to not have to have that buying power backed up, especially if you've got other shit going on. And for example, I'm trying to absolutely fire off the rest of my student loans. So I'm like, holding cash and putting cash like that doesn't make sense. I rather just pay the debt down as fast as possible, be out of that. And then once I'm out of that, then the sky's the limit on, you know, stocking money away, putting thousands of dollars away, you know, and then month after month, and then you can build up a portfolio, and then build up your position, build up your portfolio or your trading account, and then your investment portfolio, all that stuff, and then cash flow off that. It's like that game gets a lot more fun, but my priority is just get rid of the debt as fast as possible. And we're on good pace. We've been paying like really good amounts per month on the loans, way over, you know, 2, 3x minimum payments. Like we're pushing. I want to try to see if I can get a 4 or 5x minimum payment in the coming months. So that's a plan. And then of course any profits from prop firm would just feed into that for now. That's my goal. So everyone's got, their own shit going on, but yeah, there's your own situation, your own circumstance plays into what makes the most sense for you, whether that's mentally or like actually like, because you can say, well, if the S&P average is 8% and you can cash flow via covered calls and dividends and you can get 10 to 12, well, if your interest rate's 6%, why would you pay off debt at 6% and wouldn't you just invest? Well, yeah, you could. I think you could, but some people have, they think about it more and they're going to be freer mentally if they know that they're slashing that debt down to a really nice spot. And then later on, you can start saying, well, my payments are this and I only have this much debt left. It might make more sense. Market's down a lot. I might want to funnel more money into the market because there's better deals. Right now, are we getting good deals in the market? Not really. So it's not really the time, in my view, to be doing that. We could keep going higher. Could, but if we were going lower every day, I'd be like, maybe I want to consider putting money in the market instead of paying 3-4x payments on a loan, right? To finish that off as fast as possible. Same as like a mortgage and stuff too. It depends upon, everyone's circumstance. SPY technically we're popping up, but how's the volume looking? Let's see. Is the volume decent? No, volume's pretty low. So it's not surprising that we're kind of just floating around. Down, up, down. It's like nothing but bearish stuff across the board today. Yeah. Didn't know you bounce off 470. Yeah, I see the pullback. I see it. I could see it, but I don't know. I'm not in the. I used to do that. I used to be the probably the contrarian side of moves. I don't really trade that way now. Portfolio wise, it's funny because I hedged the portfolio back in late 2023, and that was like here, and then it made a few bucks, and then I put a stop loss back to break even, which stopped me out, I guess, and then we came back. I don't know. We haven't really come back that much. I don't know. Better volume on Qs today, though. The volume on QQQ is a lot better. And that's, with a minute to go, I guess. But Qs are down 0.5%. That's a move to be. We rallied back like over 0.5% here. Well, from lows, I guess a lot more than that, right? Yeah, from low of data where we are now on Qs, you're looking at about over a 1% rally. A lot of it coming late in the day. SPY is down 0.5% as well. It's a decent rally from lows. About a 0.5% move off the bottom. We're about to close up in 3 seconds. Been bullish since November. I think we need to take a breather. Market needs to price some summary cuts. Yeah, I don't know how that's going to pan out. I'm curious to see. Let's see. I haven't checked this in a couple of days at least. So next meeting, which is, I guess it's coming up, right? That's in 13 days. So 2 weeks from today, I guess. The January 31st, which is my mom's birthday. Remember that. That is essentially they're pricing in nothing's going to happen. I was seeing a lot of pricing in of the March meeting being the meeting that we cut, right? And it seems like that's where the consensus is. However, you're kind of like half and half almost. Like it's 57% a 25 cut in March, 40% no change. No, we're not cutting. It's like, is it going to be March? Is it going to be May? Is it going to be June? Right? That we get the first cut. I wouldn't be surprised if it's not March and it happens in May. And maybe not June. Maybe it's May. I don't know. We'll see. The data, I guess, will have to keep coming in, and there's part of that too is I guess projections of it. You can look at the data all you want now and say, yeah, okay, it looks like we had a little uptick in CPI, whatever, last month and stuff. It's not going as fast as we want. They're not going to be like hiking rates. It's just going to be more of like how long do they keep them flat. Honestly, like I've said, and there's a chart I'll pull up at some point soon. It's imminent for this meeting. But before the March meeting, we'll look at it. And it's when the Fed starts cutting rates, it's actually like a pretty decent chance, not 100%, nothing's 100%, but a pretty good chance the market has a decent correction or pulls back to a decent degree. We've seen some pretty big moves, and a lot of the big moves historically have been once the Fed starts cutting, because again, then the idea behind that is like, well, they're cutting for a reason. Usually there's something bad, and the Fed tends to be overcautious, or they over tighten, they overcut. And if this pendulum swings back the same way, well, then they over tightened, and now they're going to be like, holy shit, we got to cut because there's problems. And then maybe you have, I don't know, something festering under the surface. That's like the thought or the explanation behind why you see when the Fed starts cutting rates, it's not always necessarily a good thing. It is in theory, but it's the market prices things in so far ahead that once the Fed starts cutting rates, the market's now looking at like 6, 8, 12 months out. Well, what does this mean? Where are we going to be then? And then is like, what are the concerns for that? Like, that's kind of the view. So go back a couple of months ago with the recent rally we've seen, and the market was looking out and saying, well, we don't really have any more hikes. Cuts aren't coming till maybe spring, summer of 2024. So you're in the fall of 2023, and you're like, you got 9 months of kind of clear sailing here of like knowing what's going to happen, of the general conditions. And that was what the market was kind of pricing in. And so we just went up, I guess. And that's one explanation. Trying to think too much about it, in my view, is not worth your time. It's not worth the time. But everyone likes to speculate, hypothesize, whatever, to a degree. But yeah, like just looking back, like daily chart wise, right? The shit's up a lot. I thought we would see maybe a pullback. I thought this would be maybe an opportunity for a pullback here. Didn't really get it. It was just more of a consolidation. A little bit of a wider ranging consolidation now. Still, this could be a good time for a pullback as well. Maybe we just don't get it and we just kind of chop and then go higher. I don't know. The next push, I wouldn't surprise me if we take a run at 500, because from the highs if we break these highs, if this ends up just kind of being a breakout of this consolidation, right? It would be a move of less than 5% to tag $500 on SPY, which is not that insane, in the grand scheme. I don't think that's impossible. The move you had from the break of this little consolidation to the first, or the highs that it made, you had a move of about 4%. So 4 to 5% would get you around $500. So, and this is a little bit of a longer consolidation than that one was. So it wouldn't surprise me if this one, whenever it breaks, if it does, gets you 500. If it doesn't break, I do think this is a nice area to fill back through. So at least a pullback towards 460, even upper 450s would be a kind of a logical spot to fill through this volume gap. Doesn't have to. That would also retest maybe the highs that we saw back here, kind of back test through there and do whatever it wants to do, and then maybe go from there. That would make sense. I could see it, but doesn't have to happen, right? Like anything else. So we shall see. AMD finishes up 0.8 on the day. It's a good looking chart to me. Good looking chart. Yeah, volume ends up finishing not as high as yesterday, but pretty good, pretty close. Much higher than the days prior, the weeks prior. So closing over 160, yeah. So my target's 163. You can up to 164 if I really wanted to. It depends upon what happens in pre-market. I can't sell in pre-market, unfortunately, with a broker that I'm using. So on the swings, I kind of have to but I kind of have to wait till open. So if we gap up $4, then I'll adjust my sell to 164. And maybe that's a good thing. I don't know. But I'm leaving it at 163 in the meantime. Not a lot of other things that I want to dive into, though. Not a lot. So with that said, I think I'm going to wrap things up for today. We'll be back tomorrow morning. I should be live for around open. If it's not at 9:30, it'll be shortly thereafter. So stay tuned for that. And we will hang out, trade live for a bit. Likely we'll just be selling out at AMD if it goes up. If it doesn't go up, nothing's going to happen. I have stop loss at break even, so we wait for that one of the two to hit. And then if we see something else we like, then we'll be looking. But off the top of my head, I don't really think there's a ton that I'm like, I love. T-Mobile was the only one that I think I'll keep an eye on. I'm not in it. Don't necessarily think I want to be in it, but maybe it could be the one that got away. Maybe. We'll see. Otherwise, if we pull further down, there's maybe some short stuff setting up that, we've had more time for some of these charts to kind of settle down on the weak side and then set up for some consolidation breaks, maybe. So that's the look. But thanks so much, guys. Thanks for hanging out. And we'll see you tomorrow if you're around. If not, the lives always get posted up on the channel shortly after, so you can always go back and watch them. Peace.